Hi Norbert, hello everyone. It's a pleasure to be here. Yeah, a few words on the DeFi, and I've really appreciate York in explaining this. It's a pretty complex and pretty young area as well. So I think we're still learning what are the risks and how to properly manage this. The one thing which is kind of lesson from previous experience, which is ICO, initial coin offering, or traditional right now called traditional cryptocurrency exchanges, which sounds still weird. It's actually that at some initially you think or you try to explain everyone that you are not regulated or you are not falling into the regulations, but over time it's just catching up on you, and it's pretty normal, pretty standard procedure. So I mean, question is, is it gonna be the same with DeFi in terms of time, or is it gonna be quicker in terms of regulatory response? I think it's gonna be much quicker. And there's good reason for this. All right, but let me very quickly go through a little bit about Coinfirm. So just to provide you some background, we are blockchain global leader in blockchain analytics and AML solution. We currently, I mean, both in terms of coverage of crypto assets, but also in the client service. So we have over 200 clients globally, including a number of main exchanges also in Japan. Some of the example of the clients is Binance, Börse, Stuttgart, Swissquote, and some new age banks as well, especially from Europe, but also other crypto services. In terms of what we are value the most, is actually the complexity, or how many different data points we are extracting from transactions. This is major information when you are managing risk related to crypto. But focusing on DeFi, we see more and more discussion on that. It's actually there is growing regulatory risk related to decentralized finance, decentralized exchanges. We see this from both in terms of regulators, but also financial investigation units, who see this becoming a huge risk in terms of traceability of the funds. We see KuCoin case, for example, which use DeFi extensively to actually kind of disguise the traceability of the funds. So that's something which, in terms of risk related to cryptocurrency exchanges and crypto market in general, that's something that it's not going to be overlooked by the regulators. So we see also the growing huge numbers, and that's falling on what York said, that that's the numbers related to DeFi's are increasing dramatically, right? We see growing number of funds locked in like Uniswap and similar volume of trade. So that's all the numbers which you are looking at. It's actually increasing, and there's a reason for this, and a number of reasons, like for example, it's better actually in terms of obtaining liquidity, market making. But there's inherently there is huge risk related to decentralized finance, DeFi's. And if we break down this, responsibilities, this risk is, one is the legal responsibility of the teams which are running this projects, right? And I think Jörg, again, what you said is right. Like how disconnected is the protocol or DEX or DeFi smart contract from the team, how the team is able to control it. And you could argue that although, like, I think currently the properly decentralized is only one coin, is actually Bitcoin. The rest is actually pretty heavily controlled by a small group of people, including Ether. So the same conversation is happening in different parts of the world. How decentralized is protocol to be called, to remove responsibility of the team running this. even if you, because this is like, you know, you design something which is helping with sanction breach, right, and remove yourself from responsibility. That's this kind of conversation are happening in different parts of the world, and we have like examples of, you know, recent case with Mixer, owner or creator in US, who was actually captured by US special forces, and basically, you know, that's also protocol which was run, you know, almost in this decentralized way, mixing funds. But there's still, you know, connection with this person created. Another one is BitMEX. I think that's another good example when the team tried to remove themselves from the US soil connection, and this didn't go through well. So I think that's gonna be something which is, you know, responsibility of the team behind. That's going to be big, and I don't think it's actually I don't think that's actually going to be that's going to be removed from responsibility. Another one is everyone would be looking at the institutional adoption, and in our opinion, and from what we hear from the market, no institutional investor will be able to touch any of the decentralized protocols when there's no proper AML, let's say, risk management in place, right? Because nobody wants to be exposed to this kind of risks. And also, I mean, there are some groups which are kind of connected with the decentralized protocols, but also understanding this risk and understanding this market path and following this market, right? Another one major breach, or major risk, is actually breach of sanctions. So very interesting. So sanctions, you know, that's primarily, let's say, US outreach outside, you know, in the world. So whoever is actually breaching OFAC sanction list, helping terrorist financing, is going to be responsible almost regardless of the jurisdiction, right? And that's something which cannot be ignored. And we also see like FinTech saying that even if you are paying ransom, right, to someone hacking your system, you could expose yourself to major risk in terrorist financing, right, in sanctions breach. So that's actually coming back to the DeFi projects, because I can assure you, and we actually are about to issue a report which is talking about, you know, how many, you know, sanctions related funds are actually, you know, processed through DeFis, right? So that's something which is huge risk, and that's gonna be the risk which cannot be ignored. So these are the major risks when we talk to DeFi projects operators. When we talk to them about this, you know, some of the examples of when EtherDelta and KuCoin, which I mentioned already, you know, both hacks were actually transferred through. I mean, the funds from the hacks were actually transferred through decentralized through DeFi's, right? So that's another risk, right? And that's one of the legal responsibility. It doesn't have to be criminal. It could be even civil. Right. Okay. So what we do in terms of, you know, helping managing transactions in general, right? So we can identify, address, help with assessment of the risk of the counterparty. We have also a tracing solution, which means that we can, you know, you can use our tools to go through the chain of transactions to check yourself where is it actually going. And we also are the leading provider of the recovery of the assets. And you can check on our website. We have service called Reclaim Crypto, where, you know, thousands of people are registering their claims, and we're helping them recover funds, and it's extremely successful. So you can also see this, and it's, you know, for us, I mean, DeFi is one of the, let's say, space when we are tracing these funds. So, in terms of our AML solution, we have the most complex solution on the market. That's our, bread and butter on a daily basis. So we have, analysis which helps with risk analysis, monitoring transaction, visualizing different transaction, case management, and also we launching travel rule solution very soon. So what we can, identify on the transaction is this profile of the owner, the behavioral patterns, relation to darknet gambling. Some of the jurisdictions cannot touch funds from gambling. That's also, when we are helping hacks related funds, ransomware, Ponzi scheme. We do extensive, big data analysis, machine learning analysis. We create clusters, we create proximity paths. We analyze dormant, inactive addresses. One of them was very recently, interestingly, releasing some funds. So that's also something which hit the market. That's example of the, what we can do. So we can see that this particular address, this is the Dash address, is related to UNICEF. This is the data which we have in our system. What we see that in majority, it's almost 40% of Bitcoins, we know one of the party we identify in every transaction, right? So from either sender or receiver, in 40% of transaction, we are able to identify this counterpart, which is huge, which means that, that's majority. It's almost like in every transaction, we can identify someone. Risk analysis. So we created, the most comprehensive risk analysis, and we in majority of our clients, want to have simple and quick answer. Okay, yes or no. Can I pass this transaction? Or can I, allow this transaction or no? And this is critical, right? This is critical also, when we talk about DEXs, right, and DeFis, because majority of them would be running on smart contract, and they don't have time or capacity to actually analyze this transaction in a different way. So some of our clients would be simply querying our Oracle, which I'm going to talk more about, and having answer, can I pass this transaction, yes or no, right? And that's something which is unique on the market. And also, this is some of the key figures. I guess one of the key figures actually we produce around 10 millions of reports per day, which means that we have around a few billions of analysis per day in our database. These are some of the example of identified darknet addresses, scam addresses, CoinJoin, which is one of the biggest mixer on the market, addresses. We also launching, and it's also to support the DeFi space. Question about KYC. So that's something which we are also launching, AML Oracle, AML KYC Oracle to support DeFi, because without this actually it's gonna be impossible. Okay, so what we do with our analysis and how we are actually helping the DeFi space. So we created and we launched this to the market a month ago, Oracle, which is basically smart contract which connects DeFi smart contract with our Coinfirm API, right? So the smart contract is querying Oracle to get information. Okay, can I allow this transaction to be conducted on our platform or not? And in this way, we are helping to block high risk transactions. We are helping to block any sanctions related funds. We also do whitelisting of certain addresses to actually streamline the process for DEXs. So how it works there are two ways to approach this. One, when the user is actually already operating with DEX, and DEX is actually responsible in this situation for analyzing incoming and outgoing funds. So DEX is actually receiving requests for transactions. They check our Oracle. Oracle is checking our API, and API is actually responding with simple answer, which is C-score, so reference to what is the risk related to this particular transaction. And it's so effectively, if the risk is too high, that means that transaction cannot happen because it may be related to sanctions, it may be related to darknet. The other way to approach this is, and we also launching this very soon, is users are registering with us, with our Oracle website, pre-clearing certain addresses, going through KYC process, and in this way, so we are creating central database of pre-cleared users, and in this way, we actually allowing DeFi services to interact only with pre-verified addresses. For them, it's actually because that's extremely fast process, extremely effective in terms of ether cost and gas cost. So that's something which we see, and we already work with some of the clients. That's currently in the beta version, where we work with some of the major players on the market on this particular solution. So AMLT or AMLT Oracle, AML Oracle benefits are actually protecting DeFi projects from high-risk transactions. It's a smart contract-based solution, so it's easy to implement for this DeFi projects, which many times collaborate or cooperate with a number of different smart contracts. That's native to. This Oracle is actually native to the DeFi projects and protocols, right? Effective, we created effective way to block from sanctions entities, protecting DeFi projects from violating sanctions regulations. And also, in addition to this, many of our DeFi clients will be using our platform in a general way, assessing ongoing risk with transactions. So irrespective of the transactions happening on the, being blocked, they actually want to have overview of the risk related to this particular transaction. So they use our AML platform. And this AML platform is giving them overview on every transaction which is happening on the DeFi space, right? Another big support for the DeFi projects are actually what's called AML Network Risk Report. This is what we are analyzing for certain protocols. So we give the big picture of the risk related to particular DeFis or protocols or exchanges. So many of the DeFi projects would be also, on the monthly basis, requesting this from us, and we provide them with comprehensive information of the risks related to how many transactions are high risk, how many transactions are in different jurisdictions. That's information which we are providing in this report, and it helps a lot. It helps compliance officers to manage, to show what's the risk profile of the particular protocol or DeFi. This report is actually shared with regulators, investors, management team, token owners, and all the networks. So that's effectively the snapshot which is given for this particular cases, right? We also have the AMLT network, which is focusing on the DeFi projects. So many of the DeFi projects would be registering with our network and actively providing or reporting to us addresses which they see they are, for example, fraudulent, or there's something, something going on which shouldn't be happening on this market, right? So in this way, we are able to add this to our network, to our system, and propagate this to everyone involved. So that's effectively, it from our side, from my side. I will be very happy to answer your questions.
Wonderful, thank you, Paweł. So if there are any questions from the audience, please use the Q&A box, and Jörg, I'll rely on you having some questions here as well. Paweł, just from a business perspective, we've seen elliptic coin analysis coming through Tokyo already, and so it's becoming a crowded field, right? Clearly, if you're saying you're the leading solution, I won't challenge that. But one thing would be interesting: if you're leading, who's second, who's third in your mind, and are our clients actually using multiple solutions? Because right, there's still differences in functionality and coverage, and to cover all the compliance risks that you laid out, it's better to be safe and apply multiple solutions. And thirdly, your plan for Japan or the region as a whole here.
Yeah, so we already are present very much on the Japanese market. I cannot, because of the confidentiality, I cannot disclose this information. But we also work with the largest Japanese traditional financial institution on some of the projects. So we heavily present since 2017 on Japanese market. So in terms of competition, I think one of the major differentiators is what we can do with our data. One of the major differentiator is our reclaimed crypto service, because this is where you have in your system what you have in your system effectively, right, in the data collection, and we have around 10,000 new registration on a monthly basis of claims related to, it could be even small hacks, could be small ransomwares, but that's fully supported with full evidence, so that means that it's around 10,000 new data points in our database related to cryptocurrency exchanges. That's one of the indicators which is, and one of the major differentiator with us and our competitors, because in many situations then we analyze this data, and we actually actively help recover these funds, right? So it means that unless you have our solution and you see this in our systems, then you potentially are exposed to some of the litigation that can come with lack of visibility on this market, right? So that's a key differentiator.
Okay, I want to put myself off here. In the clients that you had listed, I saw like Bank Polski, which is a very traditional, long-standing Polish bank. I looked at them just recently from a digital banking perspective, because they're doing very interesting thing purely on the digital banking side. So they're also doing the pivot into cryptocurrency. So it seemed to be very advanced for like a stodgy old Polish bank.
It is, but it's also, it's going to be announced soon, but we have, some of the most traditional financial institutions like private banks, but also more into retail banks, which are currently, really moving, full speed into crypto. I don't think, right now anyone, especially, I see this, happening a lot in Europe, in DACH region, so Germany, Austria, Switzerland is very, very active market. But we also see this in the UK. We also see this from the regulators, and we see this that, like, for example, we are working extensively with Japanese regulator, right? And also, you know, I see that Harry is also typing that, you know, Harry is our, let's say, you know, peer in Japan, you know, helping us a lot in Japan. We are engaged with, you know, with FATF conversations and for travel rule, but not only travel rule, like, you know, DeFi, KYC provision for all this aspect, peer-to-peer transactions. I mean, the market is definitely moving into space. I mean, one of the things which completely cannot be ignored is, like, you know, what other assets you can generate in last month 30%, you know, revenue, right? That's only Bitcoin. You know, where, you know, which market is the least impacted in terms of all liquidity provided by central banks? You know, that's Bitcoin. You know, so you have some simple answers. You know, like you have PayPal announcement. Everyone is right now. You cannot. I mean, the crypto cannot be any more, let's say, put into the, you know. Well, let's wait and see. You know, everyone is right now talking about this, and, you know, traditional financial institutions like central bank digital currencies, that's enormous space, right? DeFi, I think, you know, one of the things with DeFi is, and I think we need to be, as an industry, completely, you know, aware of this, or, you know, and acknowledge this. It could be very risky for, you know, crypto space in principle, because if we see that, you know, a lot of illicit funds are going through this, and, you know, we have huge pools of mixing funds, you know, between different assets class, that's gonna be extremely risky for the industry, because this could be, you know, okay, we are not able to manage this risk, right? We are not able to control it in any way. And in this situation, and I hear this, you know, today, you know, in the morning, I had call with our Swiss you know, colleagues, and they said, okay, you know, right now what we can push only is, you know, peer-to-peer transaction cannot be accepted, right? So that's something which we see. So you know, we speak with Bank of Japan, we speak with Japanese regulator, how you are able to manage this risk related to peer-to-peer transactions.
Right. I mean, the risk for the central banks and that's why all the discussion of central bank digital currencies happen, of course, is that they lose control of their payment system. And so clearly they're going to fight against this and mandate or create a digital version of their sovereign currency. But at the same time, if you look at traditional financial market, and you mentioned DACH region, it turns out Wirecard was a huge money laundering operation. It's like in the traditional markets, we only catch whatever, different numbers, 2 to 5% of the
1%.
Yeah.
That's very
despite filing so many suspicious transaction reports, and everything here, because it's digital, is so much more traceable. So, I mean, what is, do you publish that statistics? Because I think some of your competitors do, right? Where you say that this percentage of the cryptocurrency activity has like illicit sources. Do you have a view on that?
Yeah, of course. You know, that's I mean, there's a number of different ways to approach it. You know, what we see is that, you know, it's around 20 billion already in crypto, you know, related to stolen funds, hacked, you know, ransomware, etc. And this number is growing around 40% year to year, right? That's number which is that's already there, right? I mean, but if you see this in terms of transactions or the number of overall market, this comes to exactly, you know, very similar number as you have for traditional finance, right? So in traditional finance, around 5% would be high risk. Let's say, you know, 5 to 10% would be high risk, and around 2-3% would be, you know, illicit, right? And that's very similar number, and this is like coming, I spent several years in traditional finance like UBS, RBS, so that's my background. And I saw these numbers, in traditional finance, and it's very similar in terms of numbers in crypto. But what we can do in terms of tracing these funds, that's incredible, right? That's amazing. Like you cannot compare this to any of the traditional finance, financial solution.
Now, from a personal user perspective, right? The risk for myself, because you mentioned at one point saying like you can go 5 hops back and identify that a coin ultimately originated from the hack, and arguably the regulator could say, well, we can trace it back, we can identify the origin is illicit activity, so we'll confiscate this and freeze the assets. And so as a personal user, I have it's the same as kind of the common law in many states, right? I have no prior knowledge of receiving illicit funds, essentially, but am I personally at risk of losing funds that had prior illicit use, even if it's like 5 or more hops prior?
It depends, there's this always question of, are you aware, or could you, if you would do proper analysis, and I think you could jump on this question as well, so there's how you could protect yourself from receiving these funds. If you have someone, I don't know, like old lady, there's always this case of old lady, transferring you 1 million in Monero, right, in exchange of your Bitcoin. That's a question, right? That's a question mark, so that's something which is, you would have the same. Like I bought this car, it was extremely good price, 30% of the market value. I didn't check it, it looks legit, everything is fine. That's a question which you would have in traditional finance as well, right? And if you go, this is partially why you should be using legitimate exchanges in legitimate jurisdictions to protect yourself, so that's extremely important to actually show this.
Makes sense, yeah. And clearly common sense prevails, right? So don't take the $1 million from the Nigerian prince.
Yeah.
Always good advice. What I also liked was this concept of the pre-cleared accounts, because like coming from traditional finance as well, we've tried these client onboarding utilities, right? DTTC tried it, and whatever, Thomson Reuters tried it. Everybody gave it a shot, and we never had a take up of that. And what you described sounded very much like having this account that you can then, right, through an API called to Coinfirm, basically confirm as a legit account, which saves so much energy in all the account opening and client onboarding processes. Really, seemed like a really good idea.
Yeah, it's coming from from what we've been requested, by the clients, right? So that's kind of, and there's a number of benefits, because once you, the way Ether or Ethereum based oracles are built, you can create smart contract in the way you have pre-cleared addresses, and it costs you almost nothing to check, to verify these addresses, right, through Oracle call. So that's also, there's a number of benefits on this. From our perspective, it's creating really safety net for the DeFi's projects, right? So that's extremely important for the DeFi's projects as well.
Another thing that Jörg and I talk a lot about are these coins, and they happen to be staking protocols, I think, for the most part, that almost have no real true economic activity on them except for the staking. And Tezos always comes to mind in that. Do you just have a view on these protocols that have a high market cap, like it's called, but ultimately there's no real active economic activity on these networks?
Yeah, I have opinion. It's very difficult. I don't want to, share, let's say, publicly on this. I think, there's a number of projects which, like, for example, Chainlink, right? Chainlink became very successful, and there's really huge value, and we partner with Chainlink, huge value in Chainlink in general, right? They got caught up a little bit into this, DeFi, probably a little bit by accident. I don't think, it's actually, like extremely, let's say, targeted approach to kind of tap on this, this market. So Chainlink would be very extremely valuable proposition to the market. You could be like, for example, Tezos is our client and our partner as well. And Tezos, you could say that, right, you could argue in every way, or you could, you can also see that it is actually early stage for Tezos, to show that the operating model, like, you could argue, and I wrote article in 2017, I think, yes, or 18, on Ethereum, that Ethereum is going to collapse because of DeFi's, right? Because of the smart contracts, because of the, this market exploding. Ethereum is completely valid, right? They actually proved themselves, so I'm, right now I'm actually saying that, that's extremely interesting. And it's like that we're going to see so much innovation in this space. I think, effectively what is happening with crypto and blockchain based, it's what's happening to open source programs, right, which actually revolutionized the entire internet. So right now is the DeFi protocol, smart contracts, actually revolutionizing finance, right? That's completely, we're gonna get value attached to every piece of content in the future, which is on the internet. Right now, you create this just for your fun, effectively, and you can, over time, you can have real value out of this. So I think it's amazing, innovation. I'm very excited with overall where the market is going on this.
Let me try another way of money laundering here. So non-fungible tokens seem to be not covered by many regulations. Certainly in Japan, they are not. And so it's not that they are not traceable, because obviously you still have them on chain for the most part. But the one way to move a large amount of money around these days seems to be I buy a gadget in a popular video game. It's like a Formula One racing car for $150,000 or so, and then shift that around or use that as a payment method. Have you started looking into that space?
Yeah, of course. I think, like what you said is exactly true, but it was like this. I remember, all days, when I used to play computer games, I think, like 2016, 2015, and there was like big money laundering. I look at this from the, gains from the money laundering perspective, right? And you could buy outside, video games, so expensive, sword, right? And use it within the game, and the value of the sword was completely disconnected. And what you could do, you could actually cash out money in Brazil, right? So that was extremely big, money laundering market, right? With non-fungible token, that's not something new. That's exactly what you said. It's well recognized. Again, you're gonna have entry points. You're gonna have some. I mean, so it's much more easier to analyze than you would do this in video games, right? Because we have this big picture, right? And if you have the big picture, then it's pretty standard approach. So it's actually really good. I think, from the value creation, it's extremely good. Probably we're gonna see art being tokenized very soon, music tokenized very soon, and it's gonna be very exciting times for this.
True. It was interesting. CoinCheck, which got acquired by Monex Group when they had the hack, as part of Monex quarterly release, they announced that they would start creating a platform for non-fungible token before the fiscal year is out, so before March 21, just interesting. So I think, as Jörg said, we're a bit restricted in terms of the coins that are traded here in Japan. So it's clear that the exchange is looking for other way to monetize their technology and the knowledge, and that's certainly one opportunity. I'm kind of out of question here. We've got a very quiet audience today. I'll count down from 10 if there's no further question. I think it was really educational, so thank you both.
Oh, hold on, Norbert. Let me ask you a question.
Please.
I've seen you in your slide. You've been looking at a Dash transaction, right, for AML. I think here in Japan we had the issue that the regulator thinks that Dash is a privacy coin, which is also the reason why it had to get delisted from 2 exchanges. So as far as I know, they're trying to get listed again. So it would be great to hear from your point of view whether it's possible to, well, track transactions and to ensure compliance with AML regulations from your,
yes.
From your point.
Yes, that's actually, everything can be done in a compliant way. The private send, first is not used often, so it's very small, and it's, you always have to have this question about, okay, what is the threshold for AML, right? There's, there's a reason for the threshold of risk, I mean, of value of transaction, right? And also, so that's first, it's actually, rarely used for small transactions, and also you can design system which is not allowing these transactions, or being marked as high risk, for every private or private related or private connected transaction. It's a private sent related transaction. So yes, there is a way, and we can Jörg, we can pick this up outside to to discuss how we have very good relationship with the regulator in Japan, but I'm sure you also do. So we're happy to pick up this conversation.
Right. Yeah, let's do that.
Yeah. There's Felix Margo of Dash Next in Thailand, who before pandemic, I think spent a bit of time lobbying in that regard as well. And you probably met him, right, Jörg?
Yes, I met him. Yeah. Right.
Dash was our first protocol client, so historically, I think 2016, so that's also, we have long history of Dash in our database.
Right. That's good to know. Yeah, let's have a discussion.
Sounds good.
Super. All right. Thank you very much, gentlemen. We'll put this out on YouTube in due course as well. I'll probably get a few more 100 views on that. So appreciate you taking the time, sharing your knowledge. I think everybody who wants to reach out can find you with the details of our presentation or on LinkedIn. Everybody here is open for business. So good luck, stay healthy and in good spirits. Thank you very much.
Thanks, Norbert, everyone.